We are joined now by Xolani, the IMF resident representative for South Africa, to talk more about their latest economic outlook and what this means for people in an emerging market like South Africa. Max, thank you very much for joining us. Let's start here. Up until a few weeks ago, the global community was actually focused on one thing, and that is recovery, economic recovery from COVID-19. What about the war has sent the global economic outlook downwards, as this seems to be a perfect storm for the world economically?
You're absolutely right. I think until mid-February, the focus of the world was on the recovery post-pandemic. There were indications that the pandemic was being left behind. Obviously, there's still risk of additional surges, but the focus was two things: on the recovery, but also on the inflation pressures that were being manifested, both in advanced economies and emerging market economies. Unfortunately, the focus now had been taken over by the war in Ukraine. Both Russia and Ukraine are important players on the commodity markets in the world, both for fuels, gas and oil in the case of Russia, and for food and soft commodities in the case of both Ukraine and Russia. So this certainly throws away a little bit the outlook for the world economy. And as you mentioned, we revised downward our growth projections obviously for these two countries, but for the global economy. I think the disruptions of the war, obviously the epicenter is Ukraine, followed by Russia, and then the countries closer related to them because of the trade links, some directly trade with them. Case of South Africa, the direct trade links are relatively small. However, these are commodities. So the commodity prices is the main channel through which the war is affecting both the growth and inflation outlooks. But there are also financial channels. As we have seen, there's increased global uncertainty about risk aversion has increased. So in a more uncertain environment is usually the case that you see, for example, investment suffers. Investors are more cautious. And also because of the higher inflation that takes away purchasing power from people, and that affects consumption going forward. So I think these are the main channels through which the events in Ukraine are affecting the global economy.
Mr. Xolani, you've spoken about two very important things: inflation and commodities from Russia and Ukraine. But we've seen South Africa, a country that is commodities heavy as well, an exporter of commodities such as coal. What does this mean for them? Because we are talking about inflation as well. This war-induced commodity price increases and broadening price pressures have led to inflation being projected upwards by the IMF to 5.7% this year for advanced economies and 8.7% for emerging markets like South Africa. What does it mean for people in South Africa that inflation is rising based on what is happening in the Ukraine, most importantly?
Well, first, the element on trade. Given the composition of South African exports and imports, South Africa is being somewhat less affected by the developments. The increase in metal prices and coal prices, which are South Africa's key exports, have gone up and more than offset the impact on South Africa from the increase in fuel prices. And that's what we economists call terms of trade. So South Africa, in relative terms, is receiving more for its exports than is paying for its imports. And from that point of view, its balance of payments is going to benefit from that. The other channel for which many countries are affected is also because of higher food prices. In the case of South Africa is relatively self-sufficient in its own food. So they do not export or import large amounts of food. Now, however, despite that fact, the price increases in commodities will bring inflation pretty much everywhere. The first channel and most obvious, and we all feel it, all of us who live in South Africa, is fuel prices. We have seen how petrol and diesel prices have increased quite significantly over the last couple of months. The government has taken some measures to mitigate these increases, but nonetheless, the increases are there, and those affect inflation. Commodity prices also, food prices, well, you may not import them, but these are global prices. And those are also impacted by the war. A possible mitigating factor in South Africa is the agricultural production is projected to be good this year. So that may help mitigate a little bit the food prices. Now, what are the impacts for this? Well, inflation basically takes away purchasing power from people, as people now need more money to buy the same amount of goods, or put differently, with the same amount of money, people can buy less goods. And this obviously has an impact, and obviously it has a stronger impact in those segments of the population which are more vulnerable, who have less income or have less resources available, they will find it more difficult to buy the goods and services that they need.
Max, let's talk about South Africa. Usually, South Africa is now being talked about a country that is growing very, very slow. We need growth to be significantly above our population growth rate, which is currently at 1.6%. What are we doing wrong? And what does load shedding, these growth sapping, man-made disasters like load shedding do to those growth aspirations?
Well, our view is that in South Africa, now for nearly a decade, and not something new, South Africa has been stuck in a low growth equilibrium. Even before the pandemic, South Africa for 6 years had negative income per capita, which means that the economy was growing slower than the population. Our analysis indicates some points that what is holding back growth in South Africa is on the supply side of the economy, is the structural impediments to growth. One of them, as you correctly mentioned, and as I like to say, that's the elephant in the room, is the issue of energy security. It's very difficult for any economy in the world to grow fast and sustainably in the absence of energy security. So that's the very first thing, is all those challenges with providing a reliable energy to the economy is, in our view, one of, if not the biggest stumbling block for South Africa's growth. The second one, in not only energy, is infrastructural bottlenecks. We understand, we know, you talk to people, there are all these difficulties with the railway system, with the ports, and although the economy may produce more, but then you have difficulties bringing your products to the ports, and even if you manage to get them to the ports, you have difficulties loading them on ships. So there are infrastructure bottlenecks. South Africa has a great potential to export certainly more minerals than they do now, but many other products. However, if these products cannot be brought to international markets due to these bottlenecks, then growth will be held down. And the other element that is important is, in our view, is domestic competition. You need to have a level playing field, and you need to facilitate the growth of small and medium enterprises. What we know from everywhere in the world is, job-generating companies are really small and medium enterprises. These are job-rich activities. Of course, big corporations are important. Of course, the mining sector is important, but many of these are capital intensive. And something we have witnessed over the last year, South Africa had a stronger than expected recovery from the pandemic, largely led because of the good condition in the mining sector. But as I said, this is a capital intensive sector, and it was a recovery that was jobless. The unemployment rate in South Africa remains extremely high, at about 35-36%. It's probably, if not the highest in the world. So it is important to facilitate the development of small and medium enterprises. These obviously need to be complemented with policies to improve the skills and education of the population. That's the way to increase their productivity and to ensure that people will have and receive better wages and better salaries for their activities.
Max Ollier, the IMF resident representative in South Africa, thank you very much for your time. Well, he says what we've all heard many times before, SMMEs, small businesses in South Africa, are the future and they need to be supported to put a dent on unemployment and actually heighten growth.